Thank you. It's such a pleasure moderating this discussion with two people I look up to and who are building two companies that I deeply admire. So Deena Jacob is probably one of the most business-savvy individuals in this country, and Mohit is one of the best ops persons in this country. So absolute pleasure moderating this session. So let me start, Deena, with you. I think you must be a bit of a celebrity, in Kerala, the 100th Unicorn Open, and people look up to you a lot. So let me just start a little with you. Tell us, what exactly is your business in very simple terms, in a manner that a 6-year-old can understand. What is neobank? How is, I know you're building open, but what is a neobank? What's a bank? What's a payments bank? And what exactly is a neobank?
Thanks, Hari, and great to be here amidst all of you. So what we are building is, in simple terms, since most of you are entrepreneurs here, what we thought is an entrepreneur should get more time to focus on the business and not on the overwhelming part of how do I get money, how do I pay money, and how do I take care of all the compliances, invoicing, you name it. There are a lot of things I'm sure none of you want to get your heads around. So that's something which we started off with. And when we talk about neobanking, what we realized is that the overwhelming part of an entrepreneur not knowing what to do with, say, compliance or recording of transaction, debit, credit, none of you should technically know that when you start a business. But you are dragged into it. Why? The fundamental reason is that the payment, which is a very critical part of doing business, receipt or paying out, you have multiple systems which go on right now, whether it is through a bank, through a card, through cash, UPI. There are a lot of modes, and those systems doesn't talk to the other part of the transaction, which is your maybe recording of that or invoicing of that. So what we did in simple terms is we brought banking blended with the other part of the transactions, right from your invoicing, everything which seals it from a document perspective. So this is where heart of the product is the entire banking, around which the transaction layers are also connected. In simple words, banking and beyond.
So who are your clients, Deena?
So we have, today in the last 5.5 years journey, we have around 3 million customers as SMEs who are using our platform. So this is right from individuals and sole proprietors who are probably on the services, all the way to manufacturing, traders, you name it, because everybody talks the same language on the transaction language, whether it is accounting, whether it is payment, whether it is taxes and compliance, whether it is payout and pay-in. Every business talks the same language. So we have small businesses. What we set out to do is to democratize banking, and that's reached to 3 million SMEs all across India today, covering about 85% of the PIN codes, in fact.
Awesome. Let me come to you, Mohit. Tell us a little bit about, Spinny. Spinny wasn't the first pre-owned cars business that was set up. But in a very short while, I think you guys have been able to establish a terrific reputation in terms of execution, in terms of the way you build the business. Tell us a little bit about what is unique about Spinny. What makes Spinny a unique company?
Thanks for having me here. Thanks for the organizers. We at Spinny are, the agenda is to simplify and make the car buying and selling experience very, very convenient, very, very accessible, simple for Indian customers. We started off 2015. The idea was very simple. Make the car buying, selling experience extremely convenient. What set us apart was the customer obsession. We have been very, very strong followers that everything and anything you do has to solve for customer, has to better his experience. And this customer obsession is what differentiated us and has been differentiating us till now from rest of the competitors. Initial days were tough. We took a step, we took a direction which was difficult to crack. We took a buyer-first approach where we said we will solve for the buyers first, because we found the problem an Indian car buyer is facing is far larger as compared to a car seller. But it was tough to solve for. But we took that path, took our own sweet time to solve for it. And now probably you started hearing about us.
So there one other player in this space, which is Cars24. I think consciously you have chosen to identify the buyer of the car as your primary customer. And Cars24 has chosen to identify seller of the car as their primary customer. Just tell us a little bit about how this difference in the way you look at things impacted the way you have built your businesses differently.
Everything has to start with customer, and we at Spinny take decisions accordingly. So when we started out building Spinny, we started looking out all the different pieces of this ecosystem and tried to find which is a bigger problem. Is it the seller who is facing the bigger problem? Is it the buyer? And we found that the buyer is the one who is facing the bigger problem. He is the one who is investing a sizable chunk of his savings. Investing 4 to 5 lakh rupees savings in any asset is a very, very big sum for any Indian middle class family. He's the one who's taking a risk by buying a used car. Most of the times it's a first purchase of his life. So it's a very, very difficult decision for him to make. He's buying an asset which is very, very costly. He's buying an asset which he don't understand. He's buying an asset which is fairly complicated and unstructured. So we thought we will solve for him first. In case of a seller, he's just liquidating his asset, which means that at the end of the day, he might end up getting maybe a few $1,000 up and down, but he won't lose his sleep over the transaction. But in case of a buyer, you've invested a sizable chunk of your money, and if you end up making a bad purchase, you possibly lose your sleep, you possibly lose that savings of yours. And that's the entire reason we decided to go for buyer first. And then of course that stems from the fact that we wanted to be a completely customer obsessed company. Solve things which really matter to a customer. Don't build a business which is probably larger, but not solving for the end customer.
Great. So, Deena, you have worked for multiple startups in the past. Last 15 to 17 years, you've been involved with the ecosystem. And this is probably the first time you're a founder and also built a unicorn already. So what is some of the differences in the way you worked in the previous startups, and what are some of the differences in the way you're experiencing the current journey? Building a large company with a lot of attention, high valuation, a lot of fundraising. How is this journey different for you?
So it has been similar and different at the same time, I would say. So in a startup, once you come in, the similarities are the kind of chaos and uncertainty you deal with and the passion that follows in the team. So thankfully, this and the previous, it has always been had a team who was passionate about the problem, have been in the eye of the problem, and they have set out to solve it. So nothing stopped. So that was a commonality. That being said, the difference is, so right from the first startup onwards, if I see, I have been into a B2C startup, which was into the multi-brand retail, and then coming to the cab aggregation space, and then coming to a super app, and then this is the first one which was into the B2B space. So if you look at it, each of the segments had its own differences to deal with. So some of the startups, we were in the time wherein we were right in the middle of the trend. So building, going and validating, getting people support. For some, it has been very easy. For some, which was ahead of time or you had to convince, had come with its own challenges. And the end results differed from one to the other, though it always had been something we had in mind in terms of, we've seen teams of passion who wanted to build. So here, the key difference was that we also started a little ahead of time, and there were times wherein we were questioned from all sides in terms of what are you trying to do? This is already existing in the market, which is the SME who is going to pay. Right. So right from those times to getting into, but I think, it was a team also who was extremely passionate and driving, and we were there to encourage each other to say, no, if we had a problem, there is a problem that others are also facing. We should be after it. So that's something which has driven us till here, and which is the passion which is going to lead us going forward also, I would say.
Great. I think, all young founders in the audience must be looking up to you as superheroes, very bold individuals, fearless. But Can you share some moments of vulnerability when you felt really weak, when you faced some massive setbacks, when you did not know what to do, when you thought your world was ending? Both of you, can you just talk a little bit about how you felt in those times? Can you draw some real example?
So if we were to talk about the Open's journey itself, so in 2017 when we started, the first thing was like, when I explained about banking as a core of it, today we know that being a fintech, we cannot provide a current account. I have dependency on bank even to build our product. So when we went to bank, initially there was, and we were like, with belief building the product and building everything we wanted, but there is a fundamental dependency. And there is a regulation. The Indian landscape has never been like the Europe where in open banking you can just go take any rails and then build on that. So these were the times when we were like, talk to investors, they're like, this is not going to work in India. This is not, what is your hook? You are getting into too many things. What is your hook? What can come out of this? So I tell you, we have gone through self-doubt, we have gone through so many people and banks telling we are providing all of this. There are so many people who are providing all of this. What is different about you, right? Then we had the pressure of proving that we have a faith in us, or rather for faith in what we are solving for. There is a need, whether you understand or not. We are after it. So that was extremely vulnerable. I wouldn't say that it was easy to tide over it, which is where I think, the whole set of the core people that you have initially, which is where I always feel in building a startup, 3 critical things matter. People, product, and then about the partnerships that you build. When I talk about partnerships, right from investors to bank, whether whoever, there has to be believers. Even if you have 100 rejections, if there is one person who says, go on, go after that one person, in the sense, go in search of that one person, which is what we had to do. But it's not easy, because there were times wherein we had self-doubts. We were like thinking, partners doesn't believe in us, backers doesn't believe in us. What are we going to do? But one thing kept us going, because we built asking the customer. They said, go on, we have a need. And and people led us.
Yes, absolutely awesome. I think, Mohit, if you have anything to share.
Quite similar, I would say. So way back in 2016, when we decided to go for the buyer first, we decided to build a business centered around buyer and close down all the other experiments or the existing business lines. It was a tough decision to do, more so because we had invested all our money, exhausted all our previous money, raised money in the previous business models. And with no money in the bank, we were saying that we will pivot to an entirely new model. And that too at a time when all our competitors were fairly large and working on the other side of the business, which is on the seller side. So it took us good 2 years to convince everyone that, okay, this is the right problem to solve. This is a better way to solve and the customer's problem in this segment. But yes, those 2 years were a huge setback or probably a tough time. But deep down we knew probably that this is the right problem to solve, which kept us going. And over a period of time, we were able to convince a lot of our stakeholders and tell them, okay, this is what needs to be built for.
I think the common thing for both of you is that you built your business as an inch wide and mile deep, which is you've gone deep down, understood every element of the customers, and because you understood your customers very well, you were so confident that you could always bounce back. Awesome. So if we just change gears a little bit, as you scale, all startups begin to face the standard scale problems, which is some leaders are not able to keep pace, are not able to cope with the increasing complexity. So you also needed to hire laterals, leaders from other companies. So can you just talk of some examples of situations where some leaders that you hired from outside or your own senior leaders, CXO level, were not able to cope? What were some of the red flags? How did you spot early on? What were the signals that told you that somebody is not able to cope? And how do you deal with that situation?
Okay, I'll start with. I've always believed that a character cannot be bigger than the movie. So I would most of the times judge a person by the discussion he's having with me. So I would prefer a guy whose discussion revolves around the problem which needs to be solved, rather than the discussion around the role, or the size of the role or the size of the people he intends to report to. Coming to the scale problem, most of the times I feel that a large chunk of people are able to scale. But what happens is that most of the times we don't scale our processes at the speed at which complexity is going on. So let's say if you are at 1x scale and you have X amount of complexity, you have grown to 5x scale. But if the processes and the products have not been built and the complexity has not been solved for, the complexity becomes 5x and probably 10x, which becomes very, very difficult for any single guy to handle. So as you scale, your processes, your products have to simplify the complexity so that at the end, even at 5x scale, the amount of complexity remains the same at an individual level, at a department level, so that the growth of the guy or the ability of a single guy or a leader to handle that piece remains intact. If you don't do that, you place any fast learner, any leader, it's bound to fail. The larger structure organization should be able to evolve with the scale, with the people.
Awesome. Deena?
So our experience has been this. Pre-pandemic, we were around 120 people, and right after the pandemic, when we came back, we had around 400 plus. Today, we are almost 600 right now as we speak. So this growth required a lot of, this is a function of the small company going to multiple functions, now being in the banking system. So there were multiple key functions, especially in terms of specialization which was required, whether it is fraud, risk, you talk about it, and then legal, regulatory. So we had to add a lot of things in bandwidth. And this is where two things we have always kept in mind. One, as much as possible, we invested in people to scale up, because being a new sector, it is very important that they understand the nuances of it. So it is not always easy for somebody to just come and understand or learn that, and there will be a learning curve, and then to perform. And the second, what we have done is, for anywhere we had hired leaders, we ensured that they are coming for the right reasons. Particularly, not because we have ESOPs, or not because a startup would be like a cool thing to do right now, or are they passionate about the idea? Do they understand what we are doing? Are they driven by the customer's problem as much as we are? So these were some of the questions that we always asked. And the last thing, or rather the biggest thing that we always look for, is the cultural alignment. So if all of these factors are not tied in together, it might be the best of the best in the industry, best of the best in some of the proven places or proven settled business models, but might not be good for startup. So this is something which we have always kept in mind, and that's where leaders also came in. One, they grew up from within the organization, and which is where we can proudly say that 5.5 years back when we started to now, almost 80% of the initial team is still with us. It's a 5.5-year journey, and they have grown up the ranks. I mean, the campus placements, the first placements we have done, they are all in the leadership level right now. They've just scaled up. So that's one we invested. And the second, we also had, the smaller teams which we had acquired, the startups who were in the similar spaces and who had the same DNA. And we had the product thinking whom we took to our fold, and they also became like fabulous leaders for us. So these are some of the things, and we had spotted red flags also. For example, certain functions that we brought with, which we didn't understand so much, and we brought with somebody who would have done it completely. But we've gone wrong where probably they were on set models which they have led, and while coming to a startup, the expectation in terms of you doing end-to-end on your own might not be their forte. So this is where I think I would say we failed than they failed, because we should have spotted it, or we should have actually been cognizant of the fact that a person as a startup in the initial years can only be 0 or 1. Like, you can either love the startup culture or hate the startup culture. There is nothing in between.
Yeah.
So that's something which we have learned from all that we have built through the years right now.
One dimension on which Open is unique is its gender diversity in the leadership team. I think you've got 50% women, 50% men, right, in the leadership team, founding team itself. So have you seen any tangible benefits of this diversity in gender in the leadership team? Has it helped you in tangible ways?
It has, Hari. I would say that our leadership, while in founding team we are 50-50, we have our leaders mainly who actually grew up the ranks and have been with us, particularly around 60 to 70% we have women leaders who have come up really up the ladder. And I would say that in the very initial stages, when you're dealing with cows, women tend to be more resilient, so that we have seen. And men have got that, very different way of thinking when it comes to problem solving as well. So I'm not telling it's about the gender, but genders are wired. There is nothing like, I'm not vocal about equality or superiority. I believe everybody has their own strengths and we should put those strengths together. So it cannot be a completely skewed teams, especially when you're building startups, because both diametrically opposite ways of thinking about the same situation is exceptionally needed. And when it talks about, Hari, people and culture is a very close to heart topic for you, right? When it comes to that in the initial years, there's a lot of ways in which probably, women themselves, they can actually relate with a lot of others.
Yes.
And being within the cows, how you handle, because that's what you're exposed to all the time. Multitasking, for example, whereas when it comes to completely focusing, maybe, men are wired that way. So we have found tangible effect of having that mix in the team and when it comes to problem solving. So that I would say that everybody should be cognizant, especially when I'm building my team also, or all of us for that matter, we're cognizant of the fact that if we have a gender diversity going the other way around, we get a little worried. We're like, somewhere we really need to keep that balance.
Very nice. So just changing gears a little bit, of late, the India tech story has evolved and several companies have gone public, startups went public. And there was a lot of anticipation, a lot of euphoria when they went public. But very soon, I think the appetite for investing in those companies disappeared and share prices dropped very significantly. Paytm lost 80% of its market cap and Zomato lost almost 60-70% of its market cap. So my question to you is that should you even allow unprofitable startups to list and allow investors, retail investors who do not know how to evaluate these kind of businesses to participate in these kind of markets? Other question I have for you is that, what should these founders have done differently to ensure that, the initial investors got some upside instead of losing 80% of all their investment? I'm just keen to listen to what you think of this whole episode, how it is unfolded.
So, Hari, it also depends on, when you talk about valuations, right, whether it's private or public market, it always depends on the end of the day, it's about the fundamentals, which is where I believe, irrespective of whether it is a loss or a profit or what exactly you are building for, if there is a future for the business, there is something which you have fundamentally built and valued, which can actually take it forward, then I think founders have done a fabulous job. I keep asking this question, what is a startup at the end of the day? Because if a new NBFC starts, we don't call it a startup. And then why a startup, right? Certain businesses are startups, certain are not. The key difference is that they are in search of a business model, something completely new. It is not a set model. They are in search of a business model, which is where it could take time. So I keep giving this example also. If a Tata Steel goes and invests 3,000 crore in a plant, nobody questions what is the ROI, or rather that's done as capital investment. But when a startup goes and builds, today unfortunately none of the accounting systems tell you where your building of the product, building of the market, because it's a new business model, new thing that you're building. Where do you account that? And that's where it goes into the bottom line, or rather losses as you talk about it. So which is where the maturity of, irrespective of some of the, again, our own experience, we will tell you, even investors couldn't value in the private market or public. So which is where I believe it, irrespective of whether the value came down in a short span of time, or is it going to be remain like that, is a question we should ask. You invest it for today or you invest it for future. So that maturity has to come up. It doesn't mean that we have to stop everything, but it's going to be an evolving process. And the investors also will mature because the capital markets mature over time. Similarly, this also has to mature over time because that's coming up.
Awesome. Mohit, your thoughts?
I echo Dina's view here. Fundamentally, it doesn't make a difference whether it is a private investor or a public investor. What matters is whether the company is fundamentally built, is it fundamentally solving the right problem, and is it building the right structures internally to solve for it. And if it does, sooner or later the results will come and the revenue will flow in. The other thing we need to understand is Indian market is a very, very difficult nut to crack. Most of the startups today are creating a new market. They are investing in educating the customers. At times, they are also building the basic infra which is needed to solve for their problem. Unlike US or China, probably where the rest of the ecosystem is already there. So probably gestation time in India might be and would be very, very different as compared to any other markets. So if you are investing, be it private or a public investor in a company, what you should evaluate or what should look at is whether the problem the company is solving for, is it the right problem to solve for, and is it solving the right way? Valuation or any other number is just a shorter play. In the long run, if structures are right, if things are done in right way, the results will come in.
So just building on this, as you scale, as your companies became more and more valuable, as you raised more money, you must have had some internal discussions on some trade-offs between growth, profitability. At what stage should you pull the levers to become more profitable? At what stage should you burn capital and grow rapidly? Just tell us a little bit about how some of these discussions took place and how did you make those decisions when it came to these trade-offs? Growth, profitability, at what stage did you say enough of growth, let's now demonstrate unit economics and profitability? And especially the environment has now also changed, pushing more for profitability. So how have some of the internal discussions changed in your respective startups?
So I would say that this depends a lot on the external situation also, because when you are taking these decisions, these are exceptionally strategic long-term decisions in terms of how your company is being built, which also means you have to be cognizant of who is your competitor, what's happening in the market, how much of a window of opportunity you have, and your resources. So it's a combination of all of this. Then you have to work out and say, can I take this call now? Or if I don't take this call right now, am I going to be the second player in the market? If the answer is yes, come what may, you have to take that call in terms of I have to capture the market. And next comes the resource part of it, which is where you have to actually go after the resources, what you need for that.
Right.
Because that should be the anchor decision. And then this follows, where you have to go raise and go take the money. And that is when you will also have the clear reason to demonstrate to the investors, because Excel sheets or nothing will convince them unless you are convinced deep within your heart when they ask about what is the fund utilization. If you have a clear strategy, this is why I'm putting, where I'm putting, this is the result which is going to come, they are definitely going to bet on you. And that's where the largeness of the opportunity, what you can show them, matters a lot. So I would say that it's a combination of factors. There is no right or wrong at any time. Right. For example, in a situation like now, you would rather chase profitability or rather ensure that you will be profitable within the resources you have than having a situation to go out and raise. So that will be a switch if you were to look at it, right? So that's the way in which the decisions happen whenever we take a call on multiple combination of factors, I would say.
Great. Mohit?
Most of the times you have to marry your internal state, your industry and the external environment to reach to a decision. So the macro or the competition or the opportunity you are chasing and the time where you currently stand, be it where the internal processes stand or where your internal structures stand, whether you are able to reap the opportunity now or you won't be able to take it because of XYZ factors. And plus the combination of external factors like how your competition is doing, how the macro world is doing, how's the liquidity in the market, will club together to reach a stage where you decide what to do. Fundamentally, if the decision is not being done or anything is not being chased for just for growth or just for vanity, and if it is the right thing to do for the business, you will invariably take the right decision. Of course, you might prepone, postpone the opportunity you want to take in. But yes, I mean, you have to marry both the worlds and ensure that the decision is taken for the business, not for decisions taken for the customer, not for a vanity metric or for any outsider, any investor, or for your personal glory. As long as it is done for the right intent, you keep chasing that window, which is the right time to take that decision. You have to identify that. Whether should I do it now, or should I do it 6 months from now, or maybe 2 years from now. That, of course, varies with the lot of state of things you are currently in.
Very nice. So there are many ways in which you can build a business or a startup. So my question to you is there a specific startup that you deeply admire, a unicorn that you deeply admire because of the way it was built, because of the founder mindset, founder beliefs, founder's commitment to doing the right things? Is there one startup or two startups that you deeply admire?
If I look at today, there would be multiple, but yes, I mean, I've spent ample time at Flipkart, so Flipkart stands right at the top. But then there is Big Basket. You have been associated with it, Hari, for a longer time. Swiggy is there. A lot more people are doing great work now. So great, commendable work is happening in Indian ecosystem, thanks to all the aspiring people. But yes, these three stand out for me.
Third one?
Swiggy stands out.
So I would say if I were to talk about one recently that I've been exceptionally looking up to, and as an example, is Nykaa. Nykaa. So especially for the founder, that proves that you don't have a age or an experience or the kind of industry from where you have to come from, any constraint that you think about. She's just breached all of that, completely different, and such a short span of time, irrespective of everything around which was there,
yes,
which was again built for the customer by thinking of how that customer wants it to be. So that's something which I feel recently, which I have come to admire a lot.
Awesome. All the three are ones that I admire too. I think we're getting signals that we're reaching the end of this program. So one quick question. What would your advice be to young founders? One simple piece of advice. I mean, it's not good to give too much advice, but in spite of that, I'm asking you, what is that one thing that you would tell them?
I don't know whether I'm qualified to give advice because we used to get a lot, and that's why I hate giving it too. But I would say only one, follow your heart. Have passion in what you do. As Khalil Gibran says, love your work, otherwise don't do it. There will be poison.
And one comment on the Kerala startup ecosystem. How do you see it maturing?
Exceptionally well. I can't tell you. We are one of the classic examples of how the government and the entire ecosystem has supported and has been a part of our journey. And you guys are lucky to be a part of this ecosystem, wherein the entire government and the entire machinery is coming together to support and further your cause. And the kind of partnerships that they are cutting and the exposure they are providing for you, take the best benefit out of it.
Mohit, I think your last words.
Solve for your customer and solve it the right way. There is no shortcut to success. There is no shortcut to building it right way. Build the right way and solve for your customer. That's the holy grail, I would say.
Awesome. Great. Thank you. Thanks a lot.